Well, ladies and gentlemen, welcome back to Boss Economics World, the only show that takes the dismal science of economics and turns it into a full-blown circus of financial absurdity. I'm your host, the one, the only, Professor Profit, here to break down the latest economic shenanigans with a side of satire and a sprinkle of shade. Today, we're diving headfirst into the wild, wacky world of U.S. Treasuries, foreign investors, and, oh, you guessed it, Donald Trump's tariff tantrums. Buckle up, folks, because this is gonna be a roller coaster of economic chaos, and I've got the receipts to prove it. Alright, let's set the stage. It's August 15, 2025, and the U.S. Treasury Department just dropped a bombshell. Foreign investors are gobbling up U.S. Treasuries like they're free samples at a Costco on a Saturday afternoon. We're talking a record high $9.13 trillion in foreign holdings as of June 2025, up $80.2 billion from May and a whopping $508.1 billion for the first half of the year. Now, you might be thinking, wow, Professor Profit, that sounds like a vote of confidence in the U.S. economy. Oh, sweet summer child, if only it were that simple. Because while foreign investors are hoarding treasuries like doomsday preppers, the U.S. dollar is tanking harder than a bad rom-com at the box office, down 11% in the first half of 2025, the worst drop since 1973. Yikes. Now, before we get into the juicy details, let's zoom out and look at the big picture. What's going on here? Why are foreign investors piling into U.S. debt while the dollar is doing its best impression of a lead balloon? And what does this have to do with Trump's trade wars, China's sneaky custodial accounts, and, oh, yeah, the global economy teetering on the edge of chaos? Don't worry, folks, your boy Professor Profit is here to connect the dots, from the surface-level headlines to the deep, dark underbelly of economic dysfunction. So, grab your popcorn, mute your boss's Zoom call, and let's get into it. Okay, let's start with the obvious contradiction here. Foreign investors are buying U.S. Treasuries like they're the last Taylor Swift concert tickets on Earth, but at the same time, the dollar is plummeting faster than my crypto portfolio in 2022. What gives? I mean, treasuries are denominated in dollars, people. If you're buying treasuries, you're betting on the dollar, right? Wrong. Welcome to the twisted logic of global finance, where nothing makes sense, and everyone's just pretending they know what they're doing. Here's the deal, folks. U.S. Treasuries are still seen as the world's safest asset, kind of like the financial equivalent of a bomb shelter. When the global economy gets shaky, and boy, is it shaky right now, investors run to treasuries like moths to a flame. And let's be real, the world is a mess in 2025. We've got geopolitical tensions hotter than a microwave burrito, inflation still haunting us like a bad ex, and central banks around the world playing a game of who can raise interest rates the fastest without crashing the economy. Spoiler alert, no one's winning that game. But here's the kicker, while treasuries are safe, the dollar itself is not. Why? Because the U.S. economy is starting to look like a house of cards built on a foundation of quicksand. We're talking massive deficits, political gridlock, and, oh, yeah, Trump's tariff tantrums, which we'll get to in a minute. So, foreign investors are buying treasuries not because they love the U.S. economy, but because they're scared of everything else. It's like choosing the least moldy piece of bread in a dumpster fire of options. And the data backs this up, folks. According to the International Monetary Fund's latest World Economic Outlook, July 2025, global growth is projected to slow to 2.8% in 2025, down from 3.1% in 2024. Meanwhile, the U.S. Congressional Budget Office estimates that the U.S. federal deficit will hit $2.1 trillion in fiscal year 2025, yep, trillion with a T. So, while treasuries might be a safe haven, the dollar is starting to look like a risky bet. And that, my friends, is why we're seeing this bizarre disconnect between treasury demand and dollar weakness. Now, let's dig into the juicy details of who is buying all this U.S. debt. Because, folks, the devil is in the details, and these details are spicier than a ghost pepper taco. According to the Treasury Department, Japan is still the biggest holder of U.S. Treasuries, with $1.15 trillion in June 2025, up $12.6 billion from May. China, meanwhile, is sitting pretty in third place with $756.4 billion, barely budging with a measly $100 million increase. And then we've got the UK, which saw the biggest jump, $48.7 billion, bringing their total to $858.1 billion. But wait, there's more. Belgium, yes, the land of waffles and chocolate, saw its holdings spike by $17.9 billion to $433.4 billion. And here's where it gets interesting, folks, market analysts say Belgium's holdings often include Chinese custodial accounts. Dun dun dun. That's right, folks, China might be playing a sneaky game of hide and seek with its treasury holdings, using Belgium as a front. Why? Well, it's all part of the geopolitical chess match. With Trump slapping tariffs on everything from Chinese EVs to chopsticks, China might be trying to keep a low profile to avoid drawing more attention. And speaking of tariffs, let's talk about India, which saw its treasury holdings drop by $7.9 billion to $227.4 billion. Why? Because India is currently in the crosshairs of Trump's trade war, with the US imposing a 25% tariff on Indian steel exports in June 2025, according to the US Trade Representative's office. Ouch. Poor India, caught in the crossfire of Trump's "Make America Great Again" tantrum. But here's the thing, folks, this isn't just about India or China. Over 30% of US treasuries are held by foreign investors, meaning the US is basically borrowing money from the rest of the world to fund its spending spree. And when you're borrowing that much, you'd better hope your creditors don't get cold feet. Because if they do, well, let's just say the US economy might start looking like a bad episode of Shark Tank, lots of yelling, no deals, and a whole lot of regret. Alright, folks, it's time to talk about the elephant in the room, or should I say, the comb-over in the Oval Office. That's right, we're diving into Trump's tariff tantrums and how they're shaking up the global economy like a snow globe in a toddler's hands. Since taking office, again, in January 2025, Trump has slapped tariff increases on pretty much everyone, from China to India to the European Union. And while he claims it's all about protecting American jobs, the data tells a different story. According to the U.S. Census Bureau, the U.S. trade deficit hit a record $1.2 trillion in the first half of 2025, up 15% from the same period in 2024. Why? Because tariffs don't just hurt the countries you're targeting, they hurt you too. When you slap a 25% tariff on Indian steel, guess what happens? Indian steelmakers raise their prices, US manufacturers pay more for raw materials, and consumers end up paying more for everything from cars to washing machines. And don't take my word for it, look at the data. The National Association of Manufacturers reported in July 2025 that US manufacturing costs have risen by 8% since the latest round of tariffs kicked in, wiping out any gains from Trump's so-called America First policies. And here's the kicker, folks, those tariffs are also spooking foreign investors. When you start a trade war, you're not just fighting over goods, you're fighting over confidence. And right now, confidence in the US economy is shakier than a Jenga tower in an earthquake. That's why we're seeing countries like India dump treasuries, while others, like Japan and the UK, are buying them up as a hedge against global uncertainty. It's a classic case of, the enemy of my enemy is my friend, except in this case, the enemy is economic chaos, and the friend is a piece of paper that says, I owe you, from Uncle Sam. Okay, folks, let's zoom out and look at the big picture. What does all this mean for the average Joe and Jane watching at home, or the finance pros trying to make sense of this mess? Well, for starters, it means higher prices. With tariffs driving up costs and the dollar tanking, imported goods are getting more expensive. According to the Bureau of Labor Statistics, U.S. import prices rose by 6.3% in the first half of 2025, the fastest pace since 2011. So, enjoy paying more for your iPhone, your car, and your morning coffee, courtesy of the trade war. And for the finance pros out there, it means volatility, baby. The bond market is a mess, with treasury yields bouncing around like a ping-pong ball in a windstorm. The Bloomberg U.S. Treasury Index might have advanced in June 2025, but don't be fooled, yields are still low, and the risk of a sudden sell-off is higher than ever. Why? Because if foreign investors start losing faith in the U.S. economy, or if Trump's tariffs trigger a full-blown global recession, those $9.13 trillion in foreign holdings could start looking like a hot potato no one wants to hold. And let's not forget the global implications, folks. The World Trade Organization warned in its latest report, July 2025, that global trade volumes could shrink by 4% in 2025 if the US-China trade war escalates further. That's bad news for everyone, from German carmakers to Brazilian soybean farmers to American tech companies. And with the US dollar weakening, other countries are starting to question its status as the world's reserve currency. According to a recent survey by the Bank for International Settlements, 15% of central banks are now considering diversifying away from the dollar in 2025, up from 8% in 2024. Oh, Uncle Sam, looks like your credit card might be getting declined soon. So, there you have it, folks, the wild, wacky world of US treasuries, foreign investors, and Trump's tariff tantrums, all wrapped up in a neat little package of economic absurdity. What have we learned today? Well, for starters, we've learned that foreign investors love US debt but hate the dollar, thanks to a toxic mix of geopolitical tensions, massive deficits, and political dysfunction. We've learned that countries like Japan, the UK, and even sneaky little Belgium are hoarding treasuries, while others like India are running for the hills. And we've learned that Trump's trade wars are backfiring harder than a broken firecracker, driving up costs, spooking investors, and threatening the global economy. But hey, at least we've got Boss Economics World to make sense of it all, right? So, until next time, keep your wallets close, your investments diversified, and your sense of humor intact, because in this economy, you're gonna need it. This is Professor Profit, signing off.